Portfolio Builder members, welcome to our Thursday Trade Alert. And I think we are just about to go live. There we go. If you're live in the chat, please say hello. Let us know you're watching live. We'll get this going in just a minute. We had another profitable trading day today, but our trade alert from yesterday was a home run hit, predicting that the Fed would lower rates. Talk about QE, in his words, natural organic growth of the balance sheet. What a funny way to word it. And now they're doing what they call repo, calling it repo madness. They're buying up treasuries and CLOs. That's all that junk debt. Now, we can't audit the Fed, so we don't know exactly what's in the books, but it's quite a riot. We've got 4 people watching so far. Scotty joined today. He's our first person to join the boot camp. Can't wait to get that going with you, Scott. I'm sure we'll have a lot more in the program by the time we go live with that. Ernest, how's it going, buddy? That Apple trade is going the right way for you already, so that's nice, but we got some more time on it. I think Oscar, welcome. We're getting our normal crew right in the start, so welcome, guys. Thanks for saying hi. Tom, very nice to see you in here as well. Kirk doesn't show up to the live streams. Kirk outperformed us on the TLT. He asked me last Monday, should he get out of the TLT? He's probably looking at all the attacks in Israel and on Aramco, wondering if it was a good time to get out of the TLT. At the same time, and we were betting down on the TLT, we did get a little profit, but if you had sold it on Monday, you made a much larger profit. And now we have the Fed essentially pegging rates at whatever they feel like with repo operations. So don't fight the Fed. Today's trade alert on the TLT is not bearish. We were lucky to catch the top, have a few weeks betting down, making money on it. But now we're going to put that TLT to work to protect our SPY portfolio. So we'll talk about the rhyme and reason behind this trade in a minute. See, we've got 11 people watching now. Please say hi. Want to know who's out there, get to know you. We've got not only a very successful track record, we also have a great community where everybody's getting to know one another, and something that we plan to do together for years and years to come. Hector, welcome. I'm not sure if I've met you yet, but thanks for saying hello in the chat. And again, this testimonial is one of my clients who wrote in. We've been trading TLT to the downside since it peaked several weeks ago, and just today we've decided to go back long the TLT, even though I'm expecting a huge run-up in the SPY. And the bottom line is, don't fight the Fed. It wasn't clear if the Fed was going to really capitulate and follow suit with all the central banks. I suspected they would, and actually they did exactly what I thought would happen. They talked about QE, which was somewhat of a dead obvious prediction when we see that they're pumping $150 billion into the banks right before the Fed meeting. Now I'm looking for Rocky to join. He had a question, wondering why we're not trading the SPY today. SPY is Monday, Wednesday, Friday, folks. Thursday is TLT. And we're entering a period of time where it's really important you guys are following the right asset allocation, going into what I call the danger zone in the SPY. We're not there yet. We're just trying to break past that sticky $300 point. But right now, more so than ever, I would highly recommend using the full trading strategy if you have enough capital. Now, this one's not bad, but it's definitely on the riskier side. I do like that USO play for a number of reasons, which we'll look at. But right now, entering into a very dangerous period of time We could have some huge profits in all of these. Literally all 4 of these assets could be going up very rapidly in the next several months. But if any real escalation happens in the trade war over in the Middle East, are the 2 main things I'm really concerned about. Outside of that, it looks like pretty clear coast for now. But of course, I really don't think a U.S.-China trade deal will come to fruition. So at some point, most likely, we could see that SPY tank and the TLT save the day. So that's why we got to be long the TLT right now, despite predicting a huge move up in the SPY. So we'll talk about that in a moment. Leonard Romans, thank you for saying hello. It's really nice to get to meet people in our live chat. Where are you from, Leonard? And so we'll get into this all in a little bit. Let me start off by getting my disclaimer up here so SEC doesn't harass us. Trading is risky. You can lose your entire investment. These results are based on a hypothetical model portfolio, not real money trades, so we don't get accused of front running, unlike folks like Timothy Sykes or Jason Bond, who clearly front run their clients, as well as a number of other advisory services out there. Although we are trading highly liquid products, so even if I were front running you, it wouldn't make a difference. This is not financial advice, it's general education. Some staff members of Portfolio Builder do actively follow the trades with real money. However, they get the trades at the same time as our members, so they cannot get ahead of you in any way, shape, or form. Testimonials we collect are unsolicited and not indicative of average results. We do not bribe people for testimonials. We love when we get them, but they are just sent in on their own free will. If I make a claim that we have a 99% success rate, it's based on a high rate of customers following the trade alerts and getting similar results. This is not an exact measurement. So here we go. We got the 99% success rate with our clients because we have predictable trade alerts. You know exactly when they're coming out, and you know exactly what we're trading, and you know exactly how the options will be designed to protect your position. This makes it very easy for people to follow the program. In 11 years of doing this, I found that less than 10% of people could ever get the same results of the advisory, and that the refund rate of these different programs out there were, if you had a good track record, you had at least a 50% refund rate because no one could get it the same result. And if you had a losing track record, which many did, their refund rates were as high as 75 to 90%. So they're making money on the 10% who are too lazy to hit the refund button. Houston, nice. I love Houston. So again, our program is extremely easy, on the go, daily retirement income trade alerts. A lot of folks actually do it on their phone. Dean says the trades take 30 seconds a day, but who's counting? My father says it takes less time to take out the trash. And I ask you, why make investing complex? Don't you have better things to do with your most precious asset, your time? My promise to you is that I will protect your assets and show you how to pick the low-hanging fruit. Our put options hanging right below our biggest allocations in the SPY and TLT make it impossible to lose very much money. Period. You can sleep like a baby. Atomic bombs can go off out of North Korea or Iran or who knows where else, and it wouldn't make a difference. We have the put option below our assets, so we get a guaranteed price no matter what unexpected tragedies happen. Now, this program is designed to create income and safety, not growth or speculation. So many of our trades actually, the options contracts become a drag on our profits. So even though we've been very accurate in predicting directions in different assets, our returns would be far greater if we didn't have some of the options pulling off some of the profit. So that's how we can generate safe return rather than just go for aggressive, risky growth. Our target return on investment is only 1 to 2% a month. And we've only had one losing month of negative 1% and an average of around 2%. If you watch this daily YouTube video, you'll know exactly the rhyme and reason of every single trade alert. We're up to 18 people now. I want to let you know that you can scroll backwards so you can get the beginning of the video. And I really would love it if you would post anything in the live chat. We really take time to get to know people who take their time to follow our program, and we'd love to hear from you. We have several different setups that make a lot of sense depending on how many days a week you want to trade. Currently, I really like this allocation and this allocation. If you're okay with a very high risk and a very high return, feel free to stick to the Tuesday, Thursday play. But just realize right now we're using that USO ETF to help hedge our entire portfolio. So we'll talk about that in a little bit, but let me just review the 3 different options we recommend. If you want to play it super safe and very simple, I would just do this allocation. You trade the SPY Monday, Wednesday, Friday at noon Eastern. We send you a text, email, and this live stream. So if you have any questions, you get access to me for a full hour right after the trade alert hits via this live stream. TLT is the long end of the Treasury market. It's somewhat an easier market to predict because we can actually look at what the Fed's telling us they're going to do and also look at what the other central banks do before they do. And it makes it relatively easier to predict than the stock market. Meanwhile, because we have central banks around the world printing money at a faster pace than ever before, we're long gold, so we recommend a 10% allocation in GDX and not GLD. GLD is the spot price of gold. We like the miners. Think about it. If the central banks start to massively buy up gold to protect the value of their currency, they could easily put a ceiling on the $1,500 spot price of gold. But what they're not doing is buying up the shares of the mining companies who will produce the gold for the foreseeable future. So as long as we see these global tensions as a high risk, this is a great setup for your total portfolio. Now keep in mind we always have put options below the SPY and below the TLT so that no matter what, we cannot have a huge hit to our account. Now here's the full allocation where you'd add in 1,000 shares of USO, which is the United States Oil ETF, and then you'd boost up your TLT to 300 shares. And this again gives you approximately half of your portfolio in equities positions and half in the long end of the bond market, plus still 10% position in GDX. Now, if your email today did not have the actual trade alert inside of it, that means your free trial has expired and you'll have to call Dean at 505-322-7515 to get today's trade alert rushed out to you so you don't miss out. Now, reminders, we have a webinar yesterday for our paid group. John says, why don't we do options on GDX? Because I want to hit huge profits on GDX, and if I sell a call option, I'm not going to get that huge profit. If you do look at my buy and hold portfolio, it's actually, if without adding all the cash to it, so we've been aggressively adding more and more money to that portfolio, it's actually up 200%. If we had not kept diluting the return, right now it shows a 50% return. So that's a smaller part of our portfolio. And it's had months with 60% return. So you can't pull that off if you bog it down and drag it down with the options. So we use the options for our bigger portfolio on the SPY and the TLT. The buy and hold portfolio will take advantage of big moves in the market with a smaller percentage of our account. So that's why we don't do that. Right after this live stream, we have a webinar coming up on Zoom. So that's a little more fun because I can turn on your microphone and we can actually chat as a group and talk about more of your questions about how our program works. Today's focus will be on the current trade alert on the TLT, why we're going long the TLT, and what our expectations are, as well as what we're afraid of in the near future. And finally, subscribe to the YouTube channel. Download the YouTube app. It's really nice. Every day you'll get to see our live stream pop up, and you can listen to it on the go from your phone. Very nice trick. I subscribe to quite a few YouTube channels, doom and gloom, bullish, Russian media, Chinese media, trying to get as many angles of thought as possible, put it together and figure out where these markets are headed. And make sure you click the little bell. That's how you get the notification. All right, let's jump into some of our results in the most recent trades. Okay, so last week we pulled a $1.60 profit on the TLT betting down, and the new trade was right here. I'll zoom in on it. So the new trade was to sell to open the 140 call. And if we do look at the trading price when we entered this, you can see it's an in-the-money call option where we collected a juicy $1.79. So this is actually below the trading price at the time of a 140.84. So why would we do that? We're betting down. We took that $1.79 credit and we bought a $1.89 in the money put option. And so here's your risk chart. We essentially did well if the TLT went below 140.95, and it did. At one point it was significantly lower, but by today it had pulled back up considerably with the Fed coming in and massively buying up treasuries to protect the bond market. So let's see how that shaped out today. And so I actually shortchanged myself 13 cents there, no big deal. Our profit's 13 cents higher than that would indicate. So we had, and this is actually an old screenshot. This is actually up 15% today. I'll pull up our track record here. Here's our Thursday. And I do want to quickly show you guys this. If you go to the description box, you get access to the free trial link, to the track record, which is what we were just looking at. You can look at our boot camp there. You can look at the daily content we're about to look at in a minute. You can audit all of our trades. Which program out there puts their trades alert out to the public to audit before they order? None. So you can see all those trades organized. Please go through it all so you can see that we are the real deal. But back to today's trade. Here's how you audit the returns on your own. First, you got to see what happened to the asset. Well, the asset went down, which is good because that's what we were predicting. TLT went from 140.93 to 140.31. And let me pull up a chart of the TLT so you can just see how dramatic. So we actually went short the TLT back in this area, watched it pop up a little higher, and then it just tanked. And we had a really profitable series of trades on the TLT. And if you had sold on Monday when it was at 136, you could have got a lot of extra profit. And now we're back to being long the TLT, but with the put option below and the call option above, which is really important. Okay, so we lost 62 cents a share on the TLT. Our option collar cost 10 cents to put on. But when we closed it, we got $1.06. And I'll show you that screenshot. So here's how we close that position out. And if you're new to trading options, our program is really simple. Step 1, you buy 100 shares of the TLT. Step 2, you sell to open a call, and you buy to open a put. And then to get out of the trade, you buy to close the call and sell to close the put. And then today we're doing a very similar setup, just with different expirations and different strikes. Hey Ron, how's it going? I think Ron just joined the program yesterday, is that right? So that's the setup that we do repetitively every Thursday to play the bond market. And again, I'm not going to reveal today's trade alert because this is a public live stream, but if you're a paid member and you have any questions about how to put in today's trade, please let me know in the chat box. All right, so now what we're going to do is a quick review of our track record. We're going to look at how some of our profits look over the last several weeks in the SPY and the TLT, just so people get a feel for the fluctuation of profits we've generated, the good, the bad, the ugly, and then we'll get into the topical content I've collected over the last 12 hours that I think are pertinent to our trading portfolio. Okay, so the TLT portfolio has almost outperformed our aggressive Tuesday trade, which is remarkable. Facebook, we were playing for several weeks. It was a dud. We had pretty much a flat return so far this month from that. And then today it popped right before we switched to USO. So that's okay. I switched out of Facebook because I think there's better opportunity in USO over the next several weeks, because I believe there will be an escalation in the trade war, as well as greater demand for oil, as what I see unfolding is dramatic money printing and all of these different countries trying to pump their economies, push up their GDP, which is going to create more and more demand for oil. So the bond portfolio is up 15.8%. Our metals portfolio is now up 53%, but please keep in mind I have diluted it dramatically. It would be up 200%. And again, we don't do options on that portfolio. We have to allow it to take wild swings to the upside and downside to make it do its job. It only represents 10% of our portfolio. The Tuesday play represents 12% of our portfolio. And then right now, I think this will be a very good catch-up period for the SPY as after Friday we get through the quad witching, which is kind of keeping the SPY stuck in this 300 range, and I think it's going to break out much higher. So we'll take a look at that in a minute. If I overlap the returns, let's see, let me zoom in a little bit. Now, if you do overlap the returns of the TLT, the SPY, the Tuesday trade, and the buy and hold portfolio, it makes it very hard to have a losing period in terms of return. So you can see our only losing month was in July for negative 1%. Other than that, we've averaged anywhere from 1.2% on the low end to as high as 3.2% in June. And again, if you do go to the description box below this video, there's links to the track record and all our past trades, so you can go through all this yourself. Okay, so let's really quickly pull up some of the trade alerts. Okay, what we're looking at now are the last few weeks of the TLT trade, just to get a feel for the profits we've been pulling week over week. In this trade alert, $1.27 a share on the TLT. And again, if you go to our website, you can click on this and go look at all of these yourself and see all the returns. $1.94 a share previous. We lost 87 cents prior to that on August 22nd. $1.81 profit on August 15th. $1.70 profit on August 8th. $1.09 profit per share on August 1st. 58 cents per share profit on July 18th. And this trade alert, I had not actually calculated it per share, but you can see we had a 10,483 profit and gain of almost 1% in a week on that trade alert. So it's been a very successful set of trades on the TLT, and we'll see if we can keep that winning streak going with today's trade. Now the bigger profit is our trade alert from yesterday, and let's take a look at that. Okay, so we said trade alert. This is September 16th, so this was on Monday. Let me try to get you guys yesterday's. Okay, so here was yesterday's trade. And so we sold the 303 call. And we bought the 297 put, predicting that the SPY ETF would jump up today. Our maximum profit on this trade is $3.48 a share. And we basically stopped earning profits. We sold the 304. So our maximum profit tomorrow will be cut off once the SPY hits 304. And when we entered this trade, the SPY was at 300. Let's just see where we're trading at right now, just to get a feel. We were as high as 302.60, and we're having a little sell-off right now, 301.66. So we're up about $1.66 a share on that SPY trade right now. So everything's going very well for us, and of course we're doing it with a lot of protection. And just to give you guys a taste of what our profits have looked like on the past several weeks of SPY trades, $1.58 loss on Monday, $1.84 profit last Friday, 19 cents for the previous Wednesday, 27-cent profit the previous Monday, $2.39 the previous Friday, 26 cents the previous Wednesday, $2.59 the previous Monday, 33-cent profit the previous Friday, a loss of $1.52 the previous Wednesday, a pretty good hit, negative $3.10 the previous trade, negative 26 cents the previous trade, $2.72 profit the previous trade, negative 30 cents the previous trade, 59 cents profit per share previous trade, 51-cent profit previous trade. And so that's just to give you a feel for what it looks like when you're following our program. Scott's looking at some technical analysis. He says, just kidding. that evil mountain, or the evil flags, the evil triangle dictating the stock market. Okay, guys, so that's enough looking at our track record. Let's jump into the top news. Okay, so the Fed came out. They dropped rates 25 basis points, which they had kind of forecasted to us. And interesting, they started buying up debt, which, let me find that graphic. I think I accidentally overwrote it. But they've been buying up about $200 billion worth of treasuries and CLOs in the last 3 days. So this is what we were anticipating, is that the bond market would keep driving the rates lower and lower until they could find an outlet. They knew they couldn't get out without the Fed stepping in to buy up this massive amount of treasuries that had been purchased. So that's happening right now. The Fed is now picking up the collateralized loans, which are just big old baskets of junk bonds put into a single product, and they're buying up treasuries. So where's all that money going to go to now? I believe it's going to flow into the stock market while the Fed sits there and supports the bond market. So all of this has continued the trend of a strong dollar and keeps our thesis strong for being long all these U.S. products. I like to use the German 30-year bond to try to predict the U.S. 30-year bond, which is primarily what's making our TLT go up or down. And the big trend is that all of these banks are lowering rates and now starting to actually buy up debt. So I think the path for the bond market will be lower yields and higher bond prices. So that little sell-off we caught in the TLT was most likely a short-term trade for us, and I don't expect us to be trying to short the TLT again anytime soon, especially when we're going to be exposing ourselves to quite a bit of risk in the SPY ETF, expecting it to go significantly higher because of quantitative easing now pretty much being baked into the books through their repo actions. So you can see that little blip on the German yield popping up, but the long-term picture is that this thing is headed lower. And you can see how correlated the U.S. market is to that. And this is all being driven by a slowdown from China, which of course keeps all their numbers secretive, so it's much harder to judge any data out of China, but we know one of their key trading partners is Germany and Australia. So if we see their economy slowing down, that's a good canary in the coal mine for what may be headed our way, and especially for the rates markets. Here's the Fed taking another $75 billion in today of treasuries and securities from their repo operation. So basically the banks say, okay, we want to borrow money and we're going to give you this as collateral. So they're giving them their treasuries that they can't get out of because nobody wants them. And these negative yield, some of this is actually negative yielding junk bonds that they're dumping now. And of course, those bonds cannot do anything but lose money because they have a negative yield. So if you think about it, someone has to take the loss at some point when you have a negative yielding bond. There's no profit in the bond because it has a negative yield. So central banks have to buy all of the negative yielding debt, or else we're going to see all the banks take huge losses and dump this stuff as fast as they can. So instead of having a huge financial crisis, we're seeing all the central banks pick up all this garbage debt that has no other outcome except to lose money. It's just not possible for a negative bond to generate a profit if it's held to maturity. The repo was oversubscribed. There's more requests for repo today. Again, yesterday was only short $5 billion. Today was short $9 billion. And so I saw some analysis today that it could potentially take $400 billion to get these banks squared up and not having these huge spikes in interest rates overnight. Last time we did this, it was in the home loan market back in 2007. So we're seeing this happen again, but instead of it being with mortgage-backed securities that have been lumped together and loaned out to people who had no business buying homes, now we are lumping together bad corporate debt and bad sovereign debt into these basket products and just kind of sweeping it under the rug and letting the banks go on and make some new investment. Most likely, I think, in the SPY. Meanwhile, we're carefully watching what happens with the Iran tensions. This is why we went long USO. Aramco is the world's biggest processor of oil, and its biggest selling point is not necessarily that it pumps more oil than everyone else, because we do pump more oil in America and Russia, but what their big selling point is that they're able to have a huge reserve. And because of that huge reserve, they can get a higher profit margin by being able to fill in the gap when there's spikes in demand and other oil refineries have a low surplus. And so this risk of one of their key plants getting taken down makes their power as being able to keep the rates of oil in a relatively small range is greatly truncated. And so that's what's the big deal with this. Also, this is the way the U.S. forces the rest of the world to be dollar dependent, because our deal with Saudi Arabia is we'll give you military protection, but you have to force everyone to buy oil with the dollar. And that allows America to keep up this big debt binge and keep the reserve currency. So I suspect this will, at the least, create new sanctions on Iran and in general create a risk premium on the price of oil during this period of time. And it's not the first attack. Iran's been doing little attacks all year, so I think this is just the start of something that's going to get perhaps out of control. So we'll see. There should be some news by tomorrow about what the U.S. is going to do in retaliation. Perhaps they shoot some missiles and blow up some Iranian either missile systems or oil rigs. So we'll see what exactly comes of that. But at the same time, often the S&P 500 and oil prices are correlated. So I like USO because I think stocks are growing up, and then we get this added benefit of Israel and Iran having this conflict, which I think is not going to end anytime soon. In fact, if you think the world's richest company is going to let itself get attacked and not retaliate, it's probably a little naive. Meanwhile, we're anxiously seeing what's going to come of this China trade deal. Wilbur Ross says the trade deal is more complicated than just soybeans. He's the guy writing a lot of the deal. I guess it's 2,500 pages long. Most likely that deal will never be passed, but what is curious is will they buy farming goods either this month or next month and take markets much higher? And in concession, what would Trump do? Maybe he would relieve some of the tariffs, or at least pause some of the tariffs and put a little relief on Huawei. So I think that is a realistic deal that both parties are motivated to make. But beyond that, I don't think much more than that will happen. In June, the Fed's economic forecast saw no rate cuts in 2019. So people are looking at the dot plot yesterday and saying, oh, you don't have any more rate cuts in there. But quite clearly, they will be cutting rates much lower over the next 12 months. And now they're talking about this organic growth of the balance sheet, which is funny. So that's just a clever way of saying they're ready to do QE. But for now, we will aggressively do repo rates. Bottom line, the Fed put, the Powell put is back. And I believe that's good for both the TLT and the SPY right now. Look at some charts. Everything is rocketing up. There's Facebook laughing at us because we missed out on a few bucks on that. But the potential for our new play on USO is much greater. We're just waiting for some news catalysts to come in and really drive that ETF much higher. China is looking strong ahead of their anniversary, October 1st. Europe's looking healthy. So our current outlook is that the SPY is going to break into new highs and enter into the danger zone, which I think will be somewhere between 310 and 330. So right now we're letting the SPY generate our profits. Once we get into the danger zone, we're going to let the option contracts generate the profits, tighten up that collar, and make it very hard for us to lose whenever the next sell-off does begin. I think the next sell-off will be most likely either a catalyst from rising tensions in the Middle East, probably less likely, but more likely rising tensions with China when we realize that they're still just leading us on and they have no intentions to do a trade deal. So carefully observing that. Now, if we do get a trade deal, I think we could get above 310 and stay above 310, and that's when we might loosen that collar back up. Here's that TLT. We did catch that nice sell-off, although I think it is headed to much higher highs the next time that we have an escalation in the trade war. So if we see a real farming good deal happen and we see a hawkish Fed, I might change my mind on being long the TLT. But at this point, it looks like rates are going to slowly work their way towards zero, and we're going to work our way into QE. Here's our USO play. You can see the tremendous trading volume jumping into this ETF over the last few years, and I think it has a huge potential for us over the next several weeks. So we'll keep that trade up. Right now, our potential return on this trade is 8% to the upside as a maximum gain and 4% to the downside as maximum loss. So we're not just buying it naked with no protection. We're turning it into an income strategy on that one. So we bought the dip right here after that big spike on Tuesday. LQD is the investment grade bond ETF, which could potentially, where can I view charts on the SPY and other ETFs? Well, Herb, do you have a brokerage account? So part of the securities being purchased recently, Oscar, we'll figure out why. I'll let Ryan know to get you your link sent. Okay, Oscar, I told Ryan to get you your link out, okay? Herb, do you have a brokerage account? That's the best place. Yahoo Finance is a good place. If you download the phone app Seeking Alpha, you can actually make a playlist or a watch list like I have. That's where I'm taking these screenshots and tracking them. Plus, they'll find all the hot news related to your... so yeah, there you go, Waterhouse and Chase. So a lot of places to get charts. Okay, so LQD is being protected by the Fed. They're taking up a lot of these packages of junk bonds and investment grade bonds and giving these banks cash in return. So they will most likely just hold those bonds out and let them disappear into the abyss. So it's hard to see a stock market crash when the credit market's so healthy. So that's what we're watching LQD for. We're not trading it. But if this were to have a serious sell-off, that would mean rates for companies like Apple, Microsoft are getting expensive, and maybe they're not going to throw out, like Microsoft came out yesterday saying they're going to do a $40 billion stock buyback program and increase dividends. So how are you going to get a stock crash when the corporations are buying up their own stocks at record pace because they get free money that's being printed by the Fed? It's absolutely insanity. But that's the world we live in. The junk bond is at all-time highs, which is insane once again. So we're seeing all the stars line up for a huge bull market right now. And I think if we get the farming deal with China, it may piss off some Republicans because it won't encompass all 7 of the key things they're looking at. But I think that Trump might take a farming deal. He knows it's going to be a very tight race. 2020 election. China's targeting those swing states that could make the difference. So he's motivated. China's suffering from potential economic collapse. They have really misallocated their resources over the last 3 decades. In fact, they've... we'll look at that another day. I got to get ready for a live webinar in a minute. But China's on the brink of collapse. Because of too much debt. So we'll see. They may be motivated enough to buy some farming goods and at least put a little more ease on this trade tensions. And if that's the case, I think we get out of that danger zone and stay above it for some time. The Russell 2000 is looking very strong. This is what Stanley Druckenmiller pays attention to either go long stocks or long bonds. And he has a whole crew of people who just copy what he does. So this chart is making me think that we may have quite a bull market ahead. This is the most important currency to watch, the the yuan against the dollar, and it's been staying at this level, which is healthy. If this spikes up, watch out on stocks. We've seen every time this spikes higher, shortly after, Trump is pissed off, China's pissed off, equities are pissed off, and bonds and gold are going higher. So right now, it's been sold off from 7.2 to the current price at 7.08. And as long as that stays in this area, it makes me think that we have a period of peace coming up ahead. Now, long-term picture, I think this is going to push towards 8, and I think there's no trade deal. I think China has some serious economic problems that it can't really fix. While we can short their FXI, the large cap banks, they're just so closed in terms of how they run their economy that I think they can prop the prices of their stocks to a degree. What I think they won't be able to do very well is protect the conversion rate of their currency. And at some point, they may just let it go. And so if you do join our boot camp, we'll be teaching you how to use the futures market to bet that their currency crashes. Now, I don't think the time to do it is now. I think it'll be sometime in October if we don't get a farm deal. So if they do not start buying agricultural products in great supply, look for the opportunity to short the Chinese currency. Look at commodities. Oil's perking up a little bit, good for our USO play. Gold's staying healthy at 1,500 despite a period of peace. Jeffrey Gundlach was just saying to look for a dip in gold yesterday in his webinar. And he continues to have the same thesis that he had in the beginning of the year. I love to listen to him. He was extremely accurate 2017, 2018. He's been extremely inaccurate in 2019. So we'll see when his predictions play out, if so. But Jeffrey and Ray Dalio are big on emerging markets, shorting the bond market, and long emerging markets, as well as being long gold. Just so far, his predictions have not played out too well, except for the gold. And he also was long Bitcoin back in December. So those are two plays he recommended that did play out. So far, the emerging market, short the TLT play, has not done well this year. And luckily, we didn't follow those trades. Here's a look at the crude. Again, oil is somewhat correlated to a healthy S&P 500 until it gets too expensive. Once it gets too expensive, we see the rates on treasuries get too expensive. We see inflation get too high, and then you get your sell-off. And you saw that right at the end of 2018, the huge crash. So that's another reason I really like that USO play. We've got the overall macro scene pushing oil prices higher right now. Plus, we have conflict in the Middle East, and we have the world's largest company trying to go public. So it's in their benefit to have at least slightly higher oil prices. And they're partnered with all the big banks who are known to manipulate markets. So I like that play a lot. We just got to be a little patient. There's your chart of gold. It's at very high prices. If we do get a farming deal that is sizable, we may actually get out of our buy and hold gold position and look at other opportunities. Now, we'll see. If that does happen, I think we may have a short-term pause in gold, despite being in a world where all the central banks are printing money, buying up government debt, and expanding the monetary supply. So we'll have to play that carefully, but that's what I'm looking out for. Now, on Tuesday play, if we don't get the farming deal, the agricultural purchase deal, I'd like to go long silver on our Tuesday play, so keeping an eye on that, but I think we're still way early on that. And meanwhile, 150,000 officers are near the border of Hong Kong. This is potentially a huge ordeal coming up on the October 1st. These Hong Kongers will not stop protesting. So that is a big risk that I think is understated in the media. There's that army. Apparently China had predicted all this would happen and froze massive amounts of food, which they're slowly releasing. I think they were kind of holding it back, and now they're releasing it going into this anniversary period. And it's actually quite amazing. China has a phone app that you have to check into. Keith says there's a dividend tomorrow. No, it won't affect the trade. Thomas Smith, hello. Thanks for saying hi. I love it when people communicate with us live in the chat. We'll have to get off soon. We got our webinar coming up. This is funny. Bloomberg has pushed a ton of money with their index products into China. So they love China. And here they are talking about how much better China is at printing money than the U.S., which is absolutely... This is why China is going to implode, is because they've printed so much money. And I can't remember what the thing was, but they had laid more concrete in the last, I think it was in the last 10 years than America has in the last 100 years. And they're building these crappy buildings that are falling apart within years. No one's living in it. And that's how they're keeping this GDP running so hot, is that they're just doing massive build-outs of these ghost cities. They're basically taking the size of New York City and just go build it out. And nobody lives in it. They have 50 of these cities out of something like 500 that are completely empty. The other cities that do have people in it are severely underpopulated. So it was a massive waste of money. And I think it's going to make it very hard for them to maintain the value of their currency moving forward. Meanwhile, while we can't trust what comes out of China, we can trust what comes out of Australia and Germany, two key partners of theirs in terms of trading partners. And Germany and Australia are in some serious trouble right now. All right, guys, we got to wrap this up because we do have a live webinar coming up. So we'll get what we missed today tomorrow. But I think you guys have a good look at what we have in store for our trade alerts, what our predictions are. And I'll throw up Dean's phone number if you don't want to miss out on tomorrow's trade and would like to get a copy of today's trade. Give Dean a call, 505-322-7515. If you just joined the live stream a little late, you can always drag the little cursor backwards and rewatch the presentation. So I really appreciate everyone. Go check your email right now. This conversation is going to continue in a free webinar where I can actually turn on your microphone or your phone and we can chat live about the program. So thanks again. We got 20 people live right now. I hate to cut you guys off. But definitely rewatch today's video if you want, or jump into our Zoom webinar. You should have an email giving you access to that. So thanks again.